let's hash some of these issues out. Joining us this morning, I've got Angelo Taningco, Research Head and Chief Economist of Security Bank. Angelo, welcome to the studio. Good to see you again after so many years.
Yes, thank you for having me, Regina.
It's a big Monday today, so much breaking news, and you're the first person I'm talking to since President Marcos's press con. So, of course, I have to ask you, what did you think of what he's already announced about the ICI?
The formation of the ICI will provide a positive sentiment for markets because this is a good step in establishing the facts and also to result in some concrete steps in order to address the problems associated with flood control projects, which are deemed to be substandard or even face several ghost projects. I think that infrastructure development has a multiplier effect on the Philippine economy. If properly done, then the multiplier effect would be positive. If it's inadequate, the multiplier effect will be to the downside. And we have seen that in the third quarter. For example, in our report released last week, we downgraded our outlook for
5.5.
the full year because we lowered our third and fourth quarter GDP forecast to 5.4%
Oh, 5.4, not
and 5.6% respectively for the third and fourth quarter. For the second half to be at 5.5%, similar to our new full year forecast. The rationale behind this is, at least for the third quarter, we saw the flood control projects being inadequate, and that resulted in several days of floods, massive flooding, which resulted in several days of government work suspension and even class suspension. So there also was a disruption to our economic activity for the third quarter. Moreover, we saw August food inflation turning positive again, with the overall headline CPI inflation quickening more than expected to 1.5%. Again, because the typhoons that resulted in massive flooding also led to a spike in food inflation, particularly those weather-sensitive produce, like vegetables and fish. So that's what I meant when I emphasized that with a lack of infrastructure development, the multiplier effect of the economy would be tilted to the downside.
In short, you're not even talking about business and market sentiment being dented by the anomalies that are coming out about the flood control projects. You're also looking at it from a practical point of view, which is all the flooding, all the disturbances have eaten up so many days in government and private sector work, right? But take a step back, give us a better sense of how the business community in the market is looking at all these investigations going on, both in the Senate, both in the House, as well as now the Independent Commission.
Well, I think overall the business sentiment is gradually turning positive after witnessing that these flood control projects were, substandard or had several ghost projects. The formation of the ICI, as I mentioned, is a good step. I think that this will, move market sentiment to be, more positive down the road. If we compare what we have been experiencing to other ASEAN peers, like for example, in the case of Thailand, as well as Indonesia, Thailand was able to replace their,
very quickly
prime minister through a constitutional court decision, and now foreign fund managers are rotating towards Thailand.
Okay.
They are now more, upbeat on the Thai market because of the revamp in their cabinet.
Because there was a problem and they resolved it very quickly.
True. And in the case of Indonesia, though they have replaced the finance minister, it was, not, well received by the business community and even investors. So investors are still a bit skeptical about the Indonesian equity market. Now, in the Philippines, we are also experiencing the same. So hopefully, if we have this kind of concrete action and decisive reforms being undertaken, and we are in the good step through the ICI, then I think that the market sentiment will be reinvigorated. And therefore, our capital markets will benefit from this moving forward.
Are you saying that there are a lot of foreign investors that are taking a wait-and-see approach to Philippine markets at the moment?
True. In fact, we saw Philippine stock market, in negative territory
Yeah.
for 5 straight weeks already. PSEI,
It's in the doldrums.
yes,
Let's
at
not beat around the bush. Yeah.
6,100 in the Asia Pacific region. The PSEI is, I think, the second lowest, I think next to Thailand. But Thailand, on a week-on-week basis, has been recovering already. So hopefully the Philippines bourse will follow suit.
This is a story I like to bring up to guests that I've been talking to over the years. And when we first started interviewing you, and that was for Bloomberg, the PSEI was back then pushing towards 10,000, right? And right now we're so far from that. We're at 6,100.
Yes.
In the short term and the midterm, what positive catalysts are you seeing?
Well, in the short term, it should be earnings that would spearhead the sentiment. In the first half, earnings were at single-digit growth, not really that impressive. But hopefully, because of the macro fundamentals, still positive, like we have rate cuts down the road, you still have inflation remaining benign, and our economic growth trajectory is still, sub 6%, but better. Hopefully, it could be better than that, at least 6%, just like nearly a decade ago, that allowed the PSCI to reach
And
a
also
record high.
pre-COVID, right?
Yes.
Yeah.
Yes. So I think these kinds of, foundations will have to be rebuilt, and therefore this can push the capital markets back towards a positive territory, and moreover, hopefully have a bull run soon.
So I guess your expectation is very much so that there will be a rate cut this week. I mean, at least with the Fed.
Yes, for the Fed, we expect a 25 basis point cut. Everybody's watching the move of the Fed for this week.
Yeah.
We think they are still going to be cognizant about the labor market's weakness, together with inflation still above target. So we expect the Fed to conduct at least two 25 basis point rate cuts by the end of this year. And that could be established by their upcoming dot plot, which they will also release later this week.
So what are we hoping for as someone that's intrinsically tied to the U.S. markets? We're hoping for signaling that there will be more rate cuts on the horizon, that they will be easing policy?
Yes, there will be easing monetary policy for the U.S. In fact, they're going to resume monetary easing, whereas many other economies like us have already continued our monetary accommodation since the start of the year. For us, a total of already 75 basis points.
Yeah.
And we think there's going to be one more in the fourth quarter.
And also cuts to triple R.
Cuts to triple R in the, I think, last March, 200 bips. And we expect that to continue per year for it to reach 0% over the medium term.
We want it to hit 0 in the medium term?
Well, I think that was the signal, of course, by the BSP governor. And we also think that we can afford the RR to go down to as low as 0% to eliminate the friction costs associated with it.
That means banks will no longer have to hold reserves and will have to be lending all that money out.
Right. And even
all that capital out.
Investors are also widely monitoring the liquidity condition of the Philippine economy. As of July, our money supply in terms of M3 grew by at least 6%. Year on year. So we are in that 5 to 7% money supply growth trajectory, so which I think is deemed healthy. And we can continue with that for as long as we have monetary easing and gradual reduction of the reserve requirement ratio.
That's very good news to hear that the industry will be able to withstand 0% RRR at this point. We'll leave that there. Thank you so much for coming to us today. Angelo Taningco, Security Bank Research Head and Chief Economist.